thank you everybody for joining us. I'm absolutely pumped about what we're going to deliver to you today. Some very exciting updates. But first, I would like you to sit back and imagine that it is 1993. A small team of financial innovators rings the opening bell at the New York Stock Exchange. And what they're launching that morning doesn't look like much. It's just another fund quietly named the SPDR S&P 500 ETF. But in that moment, the entire investment world changes forever. That was the world's first exchange traded fund. And for the first time, ordinary investors could access the performance of the entire stock market with a single click, efficiently, transparently, and at a fraction of the cost. And over the next decade, that simple idea reshaped global investing. The ETF market grew tenfold in 10 years. Trillions of dollars flowed in. Access, which was once reserved for institutions, became mainstream. And those who saw it early built generational wealth. Today, we are standing at the start of another moment just like that, but even bigger, because this time the shift isn't about the public markets at all. It's about the private markets, the fastest growing part of the investment world where the most exciting companies are being built and are staying. In 12 months, everybody will know this story, but today you're hearing it at the moment when the door to that next major transformation of the investment markets has just opened. So let's start here. When you unpack the data on the investment markets over the last decade, what becomes absolutely clear is that the investment markets are undergoing a massive global shift from public to private assets. The public markets, the listed markets, are declining at the fastest rate in 25 years, according to JP Morgan, and they are forecast to continue to decline into the medium term. As more and more companies stay private, some of the world's best companies, some of the world's highest performing, highest growth companies, they just cannot be accessed on the public markets. And so the public markets today, globally, simply do not provide diversified exposure to the true universe of corporate investable stocks. If you want that, you must invest in private assets. And that's exactly what's happening, with investors across the spectrum from retail through to the top end of town, redirecting capital to private market assets, looking for greater diversification, better returns, and more direct ESG outcomes. And as a result, the private markets have grown spectacularly over the last 2 decades, and they're forecast to continue to grow to $21 trillion by 2030, in stark contrast to the decline of the public markets. And this is creating one of the most significant growth opportunities in the investment markets of our lifetime, because this once complex and gated investment area of the investment markets is now becoming mainstream. Millions of new investors wanting access to private assets in the way that they never have before. And the only way to service that growing demand is through platform technology, which is exactly what we have built. You can't do it manually because the cost to serve is just too high. So if you want to connect issuers and millions of investors at scale, you have to do it digitally. Private markets are going mainstream. The only way to service that demand is through platform technology, and that is what we have built. So what exactly is VentureCrowd? VentureCrowd is a digital investment platform for private assets. It's built to provide access to venture capital, property development, private credit, and managed fund opportunities to as many investors as possible. A multi-asset digital investment platform built for the next generation of private market investors, designed to be simple to use while hiding the deep technical and regulatory complexity under the hood where it belongs. For investors, it's a one-stop shop for private assets, providing user-friendly digital access to high-growth private investment opportunities in VC, property development, private credit, managed funds, syndicates that are difficult to obtain anywhere else. For issuers, people raising capital in those asset classes, it opens the door to a world of new capital, empowering them with advanced digital tools that make campaign creation, distribution, and conversion faster and smarter than ever before, from launching a campaign to cash at bank in 3 months. And those digital tools that we have already built and are continuing to improve, which include our purpose-built AI agents, have been incorporated into every step of the process, giving issuers digital tools that even brokers don't have yet. And that customer value proposition for investors on the one hand and issuers on the other is not unique to Australia. It is equally relevant to global markets. And we know this because we have been monitoring global private market platform space for years. And as it turns out, what we have built is globally unique. So unique, in fact, that Salesforce invited our own CTO to present the VentureCrowd technology at Salesforce's Dreamforce conference in San Francisco just last week. He was there at Salesforce's invitation, and he presented what we have been building to an audience of the who's who of the technology world at the world's largest technology conference. Now, whatever that might mean, it certainly validates the uniqueness of what we have built and the likelihood that no one else in the market, here or overseas, is thinking about this problem in the same way that we are. And I'll come back to that a little bit in a minute. But first, let's talk about what makes this business unique in a bit more detail. We've spent many years building competitive advantages strategically that are difficult to replicate and designed to give us the best possible opportunity for clear market leadership, not just in Australia, but compared to global players. And those competitive advantages include the fact that we hold 2 Australian financial services licenses that allow us to provide a range of financial services that includes everything from running crowdfunding campaigns to offering sophisticated pooled managed funds, including complex fund structures such as the early stage venture capital limited partnership. This is a financial services business and licensing is critical. Secondly, we're a multi-asset platform. Now, in the early days, not everybody was a fan of that idea because they saw it as spreading oneself too thin. But we are the only one in the country that can offer investors venture capital and property development and private credit and managed funds. And we can do it through direct offers or through external syndicate leads or through external fund managers. No one else can offer all of that. And I'll come back to why that's important in just a minute. We can also offer deals that are, we can also deal in equity instruments and debt instruments and hybrid instruments, depending on what the issuer needs. And we can offer them to wholesale or retail investors, depending on the product. We have built a reputation for high quality deals that have gone on to deliver outsized returns, with 295% return on equity in ventures in 18 months, 40% in property equity in the last 12 months. And our brand is regarded as a trusted brand in private markets, but with mainstream appeal. And that is a very unique combination of things. To be trusted as an authority in something complex and technical, and at the same time have mainstream appeal. No one else has that. And finally, our technology, which I'll come back to in a bit more detail. But this combination of competitive advantages is unlike anything else in the market here, or we believe anywhere in the world. Now, this carefully curated combination of offerings means that we can attract a wider range of investors who might come to us for something better understood, like property, and over time find themselves investing in many other asset classes. And that has been hugely popular with our early adopter investors. We've got 80,000 registered members, 4,500 certified wholesale investors who invest an average of $45,000 per ticket size with us. And they have a repeat investment rate of 57%, which we're very proud of, with many investors investing in multiple asset classes over time, which helps us reduce our customer acquisition cost and increase customer lifetime value. And now we are focused on unlocking the potential of that 80,000 plus member database and accelerating that customer acquisition effort. So let me now introduce you to James. For privacy reasons, this is obviously not his real name and not his real image, but he is a real VentureCrowd investor, and all the stats I'm about to give you is a real part of his investment journey with us. James joined VentureCrowd in January 2022. In February, he invested into the preference equity of a property development project in southeast Queensland, returning 12.5% per annum paid monthly in arrears. Simple enough, well understood product. In March, he invested into the equity of another property deal in Carrara on the Gold Coast before the boom. So he's done well there. In April 2022, he dipped his toe into venture capital for the very first time in his life with an investment into an Australian medical device company called NeoPharma. Now, having an interest in health for his own personal reasons, he then invested into the VentureCrowd Health Tech Fund, a pooled venture capital fund. Also, a first for James, who had never invested in a venture capital fund in his life before taking a stake in a consumer goods company called Nexpa. In February 2023, he made his sixth investment with us, a mortgage fund providing construction finance for a residential subdivision project in Glenvale in southeast Queensland. Today, James holds 13 investments with VentureCrowd, totaling $2.2 million, and has seen returns in excess of $883,000, including an IPO. We are his private market strategy. And James is an excellent example of how the multi-asset strategy works and why, in fact, not only is it spreading oneself too thin, it is essential from an investor's perspective. And he's not the only one. Our market, the market, is significant for investors of this type. And this year we will be ramping up our acquisition strategies for each segment of our target customer, including investors like James. Taking a quick look at our performance across a range of metrics, I'll just highlight a few. First of all, last year's revenue, $8.1 million gross revenue, which represents a year-on-year increase of 33% in what I think most people will accept is a pretty tough private capital market. And because our revenue model includes performance fees or carried interest in almost all deals, we are holding now circa $20 million in unrealized performance fees across the portfolio. I've mentioned many of those other metrics already, and so I won't sort of labor them now. They're all in the IM. If you want a copy, you can reach out. We'll be happy to provide it. Now let's get to tech. We have built our own AI framework that we call Kai. It is a unified agentic AI and data layer powered by years of VentureCrowd proprietary data and expertise, and it orchestrates intelligence and actions across the entire business. For issuers, Kai makes capital raising faster and easier. For investors, it surfaces the most relevant opportunities and moments along the experience. For our teams internally, it delivers insights and improves decisions that unlock more capital. What started years ago when we first began this business as simple workflow software has transformed way beyond our original expectations, largely because of the advent of artificial intelligence, which has enabled our in-house technology team to digitize even the most complex parts of the capital raising process that we never could have done 3 years ago. And they can do that now using a combination of generative and agentic AI. This is not ChatGPT dressed up. ChatGPT is not a competitive advantage. What is a competitive advantage, though, is our custom-built proprietary AI agents trained on unique proprietary data, which in our case is over 10 years worth of VentureCrowd campaign data, platform activity, and investor behavior. Domain specificity and vertical specialization, which in our case is not just the complex and highly regulated world of financial services, but even more specifically, dealing in financial products, and even more specifically again, dealing in financial products in the private markets, all of which is highly complex and highly regulated. And then finally, our ability to deliver model and algorithmic innovation. You can't do that with ChatGPT. Our team, on the other hand, can tweak, change, and improve the inputs on any of our agents as we become aware of better ways to do things. And those agents can do things now that once took experienced financial services professionals days to do more accurately in seconds and for free. And we're not just experimenting with AI, we have achieved real implementation and adoption. We have built and operationalized robust enterprise-grade agentic use cases that are already delivering measurable ROI in our own business, company-wide. And then we take those things and we incorporate them into founder-facing, issuer-facing, investor-facing products. For example, we have built a crew of agents that autonomously detect platform signals and initiate the creation of marketing campaigns. These include agents specializing in copywriting, compliance, and the technical aspects of email marketing and web development. They collaborate autonomously to execute campaigns that once took days or weeks, now completed in seconds. And once ready, the agents hand over to an expert human for review and feedback. This system is powered by a proprietary reinforcement learning model that we own and we can tweak at any time. And that improves continuously as campaigns launch and the platform grows and it gets more data, again, that is proprietary to us. It's been in live use for months and it's saved hundreds of hours, providing both scalability and cost efficiency inside our business. Secondly, we have developed agents that act as data scientists for all internal team members. These agents are trained on the work of our own data scientists, democratizing access to business intelligence and insights for everybody in our team. This enables internal subject matter experts to make faster, better informed decisions that drive higher commercial performance and capital raising outcomes. And finally, and this is super important, model and algorithmic innovation, which you just can't do with ChatGPT or off-the-shelf AI. Our team can tweak, change, and improve the inputs of any of our agents as we discover better methods and opportunities. And there's a lot the platform can do at a user level, at a customer level too. But let me just give you two examples from an issuer's perspective, from a person using the platform to raise capital. When they're setting up a campaign, one of the hardest things to do is one of the hardest first tasks is to deliver clear, concise campaign messaging, right? They might be super expert at their business, running an amazing startup or scale up, but messaging is a unique skill set. And without it, you can't raise capital. To do it well requires a combination of financial services experience and communications or marketing expertise, which is a very unique skill again. This task was a task that used to be outsourced to an agency before you could even get started. And it would typically cost a founder or an issuer $2,000 to $5,000 to do that first piece of work. With our platform, you can drop the pitch deck into the system and it will not only propose your key campaign messaging, but create your offer pages, create your social media assets, create your emails, distribution communications, using VentureCrowd's best practice playbook and 10 years worth of proprietary campaign collateral and data in seconds. I'll give you a second example. Once you've launched that campaign and investors begin expressing interest, the issuer, the person raising capital, jumps onto their founder portal and they get a mini CRM, which shows them all of the investors who've expressed interest, the amount they want to invest, and some other details about those investors. The next step in any sales campaign, capital raising is no different, is to nurture and convert those leads. But to do that, you need to know who to prioritize. And you need to do that by assessing who is most likely to invest. Otherwise, you're going to blow a whole lot of time talking to tire kickers. Now, previously, you'd need a business analyst or a junior corporate finance team member to research the names, work out who they are, what they've invested in before, what have they looked at, where have they spent time digitally, and then form a view about the likelihood to invest. With our platform, you simply press a button and the agent assesses hundreds of digital data points on each investor and ranks them based on that data, telling you who is most likely to invest based on actual information that wouldn't have been available to an analyst, giving you that information more accurately, in seconds, and for free. Now, we could spend the whole day talking about technology, but I'm going to leave it there for now. I just wanted to give you a feel for how the tech powers our internal efficiencies and what it means for an issuer. Since launching our own AI, our revenue has increased 30%, and founders using our platform have increased by 220%. And of those new users, nearly 700 founders have commenced building their campaigns, representing a total capital demand of $446 million. And we are just getting started because since then, we've collected detailed user feedback, we've mapped out what's working and what could be improved, we've mapped out what features need to be prioritized next and which features to accelerate that provide the most value to the customer and therefore to our business. And our team is currently building the next iteration of that platform, which we expect to release in Q1 of 2026, hopefully January. And it will be unlike anything else in the market. Now, I mentioned this a little earlier, but just to reiterate, VentureCrowd has a proven business model. We are revenue generating. We've got a very clear revenue model with multiple revenue streams, which protect us against the cyclicality of the venture market or the property market or the private credit market or anything else. Last year, we generated $8.1 million in revenue, which was a 33% year-on-year increase at a gross margin of 58%. And in FY26, this financial year, we're forecasting 11.7 million at a 72% gross margin and EBITDA of 2.2 million, driven by the next release of our Founder Assist product in January. So what's next? How do we grow? By Q1 2026, we will release the next version of our Founder Assist product, which will include a suite of new AI-powered functionality. That product establishes a highly valuable technology foundation, which will then be applied to additional use cases and asset classes: property, private syndicates, and funds. After proving the technology in our home market, which we'll spend most of 2026 doing, we will then commence international expansion towards the end of next year, and we'll begin building our secondary market and cap table management solutions at that time. VentureCrowd is a capital-light platform business with the core technology already built and ready to scale, first through product and then through additional asset classes before expanding globally. And that global plan is expected to materially increase our valuation over the next 12 months as we lead into our earmarked institutional growth capital round at the end of next year. Briefly on the team, we have assembled a unique multidisciplinary team with a complex mix of skills from technology to legal to compliance to funds management, financial services, UX, and design, to ensure that our management team has no gaps as we push into the next 12 months of this ambitious plan. I won't spend a lot of time on this other than to highlight the recent appointment of two people onto our advisory board, Sean Gregory and Jesse Arundel. And let me explain to you why they have joined. Firstly, Sean. Sean is a former PwC executive board member and was the leader of the PwC deals team for Australia. He brings a wealth of experience in top end of town leadership, strategy, corporate finance, M&A transactions to our business. And in addition to being a very valuable mentor to me personally, Sean will play a very key role in helping us to prepare for and to execute our institutional growth capital round late next year. And the second addition to our advisory board is Jesse Arundel. Jesse is the head of artificial intelligence for Optus. He was formerly the head of emerging technology for CommBank. He's a mentor at StartMate. He's a member of the Australian Technical Committee and the corresponding International Technical Committee for Innovation Standards. He's been recognised as one of Australia's top young executives by the Australian Financial Review and been awarded Australia's top 100 future leaders. Jesse brings to the business and to our strategy top end of town experience in the delivery of not just complex technology projects generally, but with a specific focus on AI, which is rare, especially in Australia. So I am very confident that we've got the right team to deliver on our plan. So let me summarize all of that like this. The shift from public to private markets is creating one of the most significant growth opportunities in the investment markets of our lifetime. With growing demand for private assets coming from millions of new, high-value, completely underserved investors. The only way to effectively service those people is through platform technology, because that is what they expect. To have any chance at real market leadership, that platform, the leading platform, needs to be multi-asset. It needs to be backed by deep financial services expertise. It needs to be able to service retail and wholesale investors. It needs to be able to operate using technology that is custom built, not off the shelf, trained in proprietary data, has clear domain specificity and vertical specialization, and enables model and algorithmic innovation over time. It needs to be wrapped in a brand that is regarded as a trusted authority in private markets, while at the same time having broad mainstream appeal. And it needs to have built for itself a reputation for high quality deals that have gone on to deliver outsized returns across all asset classes. And finally, it needs to be delivered as a technology product with a user experience that makes all of that complexity completely invisible. And that's what we have built over many years. And now we are ready to hyperscale using market-leading proprietary agentic internal AI. VentureCrowd's platform is unlike anything else in the market. We are at the forefront of the shift to private markets. We have groundbreaking technology in a market that's about to explode, and we are laser focused on hyperscaling that business over the next 12 months. And that's why we are attracting the attention of industry heavyweights, including Salesforce, Google, and Optus's head of AI. In the next 12 months, in 12 months' time from now, everything I have just told you will be accepted, widespread, common knowledge. And it won't be possible to invest in the growth that will have already occurred once that happens. Our next raise will be institutional. It will not be public. And so if you want to be part of what we're building and what we're doing in the next 12 months, now is the time. For more information, head to the VentureCrowd website or reach out to our team. I welcome you to join us on this journey.